Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I'm going to be your host here for about the next 20 minutes here on Options Guide TV. Earnings are coming. We have a slew of banks that are announcing next week, and I've decided that I want to basically make a financials head a financials hedge fund. So I want to do a few trades in a couple of the stocks that I like. The deal making stocks, for lack of a better way of saying it, JPMorgan, Goldman Sachs. Goldman Sachs announces on Wednesday, so we're going to put a trade together. We'll probably do that on Monday. The JPMorgan trade, well, we for some reason the stock decided to run up as soon as we bought the position. So somebody out there must be watching Options Guide TV, and because the next day we had a very strong move to the upside, and then we are now pulling back a little bit on the financials in general. But overall, the last couple of days have been positive for the financials. So JP Morgan right now is trading at 286.36. The trade that we put on just the other day was the August 1st expiration. We bought just in the money option, and we sold just out of the money option. So let's run to the Tradier Pro software right now, and we'll take a peek at this trade. And in this instance, if we look at this trade, we're buying the 280, selling the 300. We paid about $8.50 for it. We're at $8.89 at this point in time. The 300 strike, like what we mentioned on the call that we set up the JPM trade, was that if the market did go against us, we could potentially roll this down and make some money on the 300 strike call. I kind of like to do that going into earnings, where you anticipate a stock may run up. And we had a very strong move the other day. If we look at the chart, and I'll pull it up. Let's see if I got JP Morgan here. If we look at the chart over the last couple of days, we see the market made a strong move up and then came back down, and now is kind of, I guess, waiting for earnings to happen. So, overall, things have been positive in the financials. I like the way the yield curve is working. They're talking about reducing regulations, and because of that, more deals are being made. So some of the companies that are making that are deal makers, the stocks have been strong. And we see that here with JP Morgan. One of the things I like is that it has backed off already going into earnings. So you have this strong move up. And Goldman Sachs looks very similar too, by the way. Strong move up and then a little bit of a back off. And if not, then you worry a little bit more about having strong earnings, and the people, the retail investors in general, sell the news, right? Sell that potential if there's any good forecasts or anything that comes out good out of their earnings report. So I like the setup of the chart. Obviously, this is kind of parabolic. I'd like it to be a little bit more smooth, as opposed to going straight up and then coming back off precipitously. But I like this trade. We're up 50 cents on it, but we're going to let this one ride. We're going to ride it into the earnings report, and that's the plan. So now, one of the things that I do want to highlight, if we look at JPMorgan Chase and we just look at the price to book. Now, the price to book is one way to look at banks and financials in general, is that they're comparing what the price of the stock would be based off of the assets that are in the company. If you have a lower price to book, right, that doesn't necessarily mean it's a bad company. It's almost like a PE ratio being a little bit lower, meaning that they're not valuing the assets as much, and there's potential for an upside move. So the reason why I bring that up is if we look at JP Morgan, kind of a deal maker stock, and then you look at Goldman Sachs, you have the price to book here at 119, a little bit lower. But the one that always kind of jumps out at you is Citigroup. And Citigroup, once again, look at this chart. Same. It's hard to tell that this is Citigroup, and I got to look at it twice to make sure that you're not quoting JP Morgan. But if we look at the price to book, this is in the sector quite a bit lower. They're valuing the assets in Citigroup at a lower valuation than they are in Goldman Sachs. and JPMorgan. So I like this stock. It's not as it doesn't get the respect I think it deserves. The PE ratios also is trading down around 13 in this level. So we got a low PE, a low price to book. The company's doing well. The sector's doing well. Let's get long Citigroup. Citigroup's going to announce on Tuesday. It's going to actually announce the same day JPMorgan does, and it's going to announce in the morning. So both of them will have an effect on each other, as what usually happens in when two companies from the same sector are announcing earnings. 1 second, I'm trying to get rid of this. And I want to double check, make sure that my thought is correct here. Let me get you all the announcements that are happening here. Okay, JPMorgan is announcing in the morning on Tuesday, July 15th. Then we got Citigroup, and then we got Wells Fargo. Another interesting stock, but it's really hard to trade options on, is BlackRock, another deal-making stock. I'm curious where the assets are. It's not quite the same as a traditional bank or financial, but see the price to book's a little bit higher here at 282, and what an opportunity down here, right, all the way down to the 780 level. So Liberation Day, I guess, really hurt BlackRock and has made that's a parabolic move to the upside. Like you talk about JP Morgan, holy cow, look at BlackRock. And I still think there's some movement to the upside. Trades at a little bit higher PE, a little bit higher price to book, but just the assets at BlackRock and the money management, and they like to look at deals. Look at these white candles. Holy cow! So this would be an interesting one, but this is the exact opposite scenario in that we had the breakout. We're all the way up to here. I think that this one, that BlackRock, might get sold off, right? Because we don't have that downturn in the stock, and we're actually running away from the 200-day moving average quite a bit, aren't we? We're quite a ways extended here. RSI, I'm sure, is a little bit high in this instance too. So I'm not as excited about this in that there might be a buying opportunity if they do announce earnings and it does get sold off, and we break down to this level right around here, right where that previous high is, and that can hold. That would be the way that I would approach BlackRock. Just a quick synopsis on it. Now, going down, Bank of New York is also announcing on that day, on Tuesday, and then Wednesday. These are all before the open. Don't forget that. Bank of America. Let's look at Bank. So Bank will be a little bit more like Citibank as far as their price to book is concerned. Yeah, they're trading right around $1 here, but same type of movement to the upside. And that is a breakout there and a retracement. Yeah. So Bank's an also interesting one here. And then you got Progressive in the insurance world, which has had a strong move. Very interesting week next week. All right. So let's do Citibank. Citigroup, I guess I should say. I don't want to exit full screen. I want to go here. Citigroup. Now, implied volatilities are raised, but once again, they're not ridiculous. You're trading at a 29% implied volatility. Historical volatility is 28 actually right now. Wow, just not even over here. We're at 29, 28. I mean, do we dare just get long a call option? I was thinking about doing a spread. I actually don't know if I mind doing the call option. You're always going to get some retracement in vol, but right now it's amazing that it's trading so close to its historical volatility. We got to do a spread. Let's do a spread. All right, here we go. We're at 92, which is the August 1st expiration, and I'm going out beyond the earnings date because I'm a little bit more bullish. If you do get a sell-off, I don't mind hanging on to the position for at least 15 days, right? If we do August 21st expiration, I'd probably get out of it at the last, say nothing happened in the stock, just with 10 days remaining, just get out of the position. So we did JP Morgan, and we did that August 1st expiration. So let's do the same thing with Citigroup. And we're going to go a little bit in the money. We're going to buy the 85 strike call. I think it'll just clear it out. Well, let's send this to the what if calculator just to have it. And then let's come back. We're going to buy the 85 and we're going to sell. Let's sell something right around the 20 level, right? So one standard deviation move, that's going to be somewhere around the 16 as far as the delta is concerned. 92 is going to be around 20. Expected move on the stock is 275 plus 224. Yep, at that point in time. So $5. $5 puts you at 91 right about here. I want to sell the 92 strike. Maybe we sell the 91. That's about the expected move. Yeah, let's sell the 92. Here we go. Let's do it. It's 20 cents difference, but so $2.60. That is our break even will be 85 plus 260 or 87.60. So a small move to the upside gets us to break even on this trade, giving ourselves a little bit of a room to run right around the one standard deviation, just beyond the expected move. But we want this option contract to go away, and we want this one to do our work for us. We're buying a 61 delta, but that is going to increase, pretty well if vol drops, and this one will go away, and this one will have a lot of intrinsic value. So this is going to be the official paper trade for Friday. What is the date today? July 11th on Options Guy TV. And I want to build a few more of these. I want to look at the financials and the ones that we have a little bit of a pullback on in the marketplace. I don't mind getting long them going into earnings. So in this instance, we're going to look at Citigroup, which is on a valuation standpoint. I just showed you price to book, even PE. It's had a strong move to the upside, but they're still valuing the assets in Citigroup at a lower cost than they are to JPMorgan, even Bank of America, which is more in the same realm as Citigroup. So interesting enough, $2.60. Now, if you have any questions or comments, please let me know. One trade that we do got to look at today, because we are coming to that expiration date, is our trade that's in the VIX options. So let me pull this up. And no questions or comments at this point in time. All right, let's go look at our VIX trade. At this point in time, I think I want to get out of the trade. One of the biggest things that I thought would create a lot of volatility was going to be the news in the tariff scenario. That can got kicked down the road. And I guess in a way, the marketplace is thinking the most recent headlines out of Washington are a good thing. VIX, not Visa. There we go. Slowing down a little bit. And so we've sold the 18 and bought the 16. And right now we have the VIX trading at 1661. So the expiration is the 16th. So it's kind of we're got 5 days remaining. Time premium helps us, and there's a lot of time premium that are in this option contracts. So we would need a news headline to make our trade go in the money. And so at this point, if I have this position on, I'm going to look to close it out. So let's see where the marketplace is trading at. It's going to eventually, the futures contract has to match the actual index. So that's the way the VIX works. The VIX index doesn't matter as far as the options are concerned until we get close to expiration. The VIX would be considered the spot as far as the futures market is concerned. So 1659 is where that is at. We got the futures 80. So 17, yeah, right about 1750, somewhere between 17 and 1750. Okay, that's about where the futures market is at. And the reason why I always say this, and I assume that everybody watches Options Guide TV every week or every show, but that's not always the case. But what you want is the put and the call to be wherever the put and the call are very close in price. See, this is 11 cents difference at the midpoint between this. That means that's where the futures market is at. It's using something called put call parity, using the options prices to figure out where the actual futures market is at. So because of this, with 5 days remaining, I'd close this trade out. That simple. So here, let's close it. Here's how it would go. We would be buying back the 18, and that would be buying to close on the put side of things. And then we did the 16, and we are long that one, so we'd be selling that for $1. So we're paying $1 for it. I think we put the whole trade on for 60 cents. I'm not going to go back and research it, but I would just close this out. You have 5 days remaining. Unless you get lucky and you get that big event, I'm not going to say black swan, but big event, a news headlines that drives the stock up over the next 5 days. It's always possible in this marketplace, and with this administration, it's always possible to get a news headline that can make that can jar the markets. But now is the time to get out of the trade. And we set up a real good trade when we put it together. The VIX, the futures was around 19. We sold the 18, bought the 16. I still like that trade. Now, the thing that I do like more so is to look out into the August or into the September expiration. Now, let's go and take a peek at August. We had a lot of volatility last year. If you remember that, we had almost the biggest I think the biggest downturn of the year was in August last year. So let's go look at September. September is traditionally one of the most volatile months, and even more so than October. But September and October, if you ever look at the big black swan events, to use that term correctly, a lot of them have always happened on Mondays in September and October. That's when the big downturns have happened. So if we go out to the September contract, I'm guessing it's going to be September, 68 days. We are looking at right here, 20. So we're still hanging tough at that 20 range. We're somewhere between 20 and 21. 20 is 288 on the call side. 21 is 315 on the put side. So let's buy this one and sell this one. Delete that. Let's buy this and sell that. Buy this and sell that. So yeah, $20.50 midpoint, rounding up. So the future is still over $20 going out to September. Really, and I mentioned this when we put on the other VIX trades, that if we could get this down below 19, I would really like to just maybe even buy call options outright on the VIX. But I don't mind doing the VIX, buying this call, and then selling that put against it. I don't think the time's right. I think we're going to wait. We're going to wait a little bit longer before we look at doing our September or October VIX trade. So any other questions or comments that we have? Short and sweet show, but we are back and working again. So we got the software has fixed the issue of the Chrome upgrade, the Chrome browser upgrade, and that was our issue that was adding instability. And now we are live again. You get to see my smiling face once again. So come back on Monday and take a peek at it and see how things are going. And we're going to set up another trade in our hedge fund this week, going into the financial markets earnings. We're going to look at probably a trade in Goldman Sachs. Let's see if we get a little bit more downside. Goldman had a big up day yesterday, and it is now down. It's given a little bit back. It's given $4 back, but it's an expensive stock. So Citigroup. So we got JPMorgan long call spread, Citigroup we went a little bit different trade. We started a little bit in the money, sold a little bit out of the money, and Goldman Sachs will probably straddle the market. We'll do 3 different spreads and see how each of them react. But we're going to probably get bullish on Goldman Sachs too. So that's it for this edition of Options Guy TV. See you Monday for the next edition, 11 a.m. Eastern Time. Check out Tradier Hub if you have not, hub.tradier.com. Please build a sign-on. It's free to do, and you get access to all the great speakers that Tradier sponsors via their hub. So hopefully see you Monday morning for the next edition of Options Guy TV at hub.tradier.com. Hope to see you in the hub.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.